Employment in Singapore continues to grow in the third quarter this year, but the Manpower Ministry warns that the job market's recovery is showing signs of slowing. Some analysts say that the hiring outlook remains bright for certain sectors, but restructuring may be on the horizon for others.
It seems like crowds and jobs are making a strong comeback in Singapore. The country's total employment has risen over 75,000 from the previous quarter. This has surpassed pre-pandemic levels by nearly 2%, aided by the growth in the infocom technology and financial services sectors. But some analysts are saying the grass is not green everywhere. They point to sectors like electronics and biomedical manufacturing, which are facing headwinds from slower global growth.
The electronic cycle appears to have peaked, and consumption globally is shifting from goods to services. At the same time, China's economic recovery may not be very robust. It may be a fairly subdued recovery, and that may mean some downsides for the chemicals sector.
Retrenchment has also nearly doubled from the last quarter, rising to 1,600. These were mostly in services and manufacturing. The Manpower Ministry also expects growth to be uneven for the next quarter, with slower growth to hit trade-reliant sectors as external demand weakens.
Obviously, bottlenecks are going on. We see China with its zero-COVID policy. It's not something that's likely to end anytime soon, given certain countries' stance on COVID, given the ongoing war in Ukraine. And I think we should just be prepared for that.
MOM also notes that for wage growth to be sustainable, wages should rise according to improvements in workers' productivity and skills. But experts stress that it's important for wages to remain competitive amidst the rising cost of living.
If prices are increasing by 10% and my salary or your salary is increasing by only 2%, we are effectively poorer, right? Our purchasing power has shrunk. So I don't think we can say that, hey, standard of living is going up and all that, when it's really shrinking at a very rapid rate for the last couple of years.
Still, a glimpse of hope at the end of year season and beyond. Businesses and workers are anticipating an influx of visitors to Singapore, which will be a welcome shot in the arm for the tourism sector.
At this stage, I think we are only about 50% that of pre-pandemic levels. Chinese tourists have not returned. So it means that there's still a lot of potential to come in 2023 and 2024.